Guys, stick with me for a few minutes and I'll show you some very high risk stocks with 10x potential upside from now. So here's the deal. Rich Tech Robotics already has robots operating in the real world, hundreds of them deployed across, as you can see here, restaurants, hotels, healthcare facilities, casinos, and other venues around the US. It's a founder-led company, which I love because you can look this up. It's a Harvard Business Review study that found founder-led companies outperform over the long run when compared to non-founder-led companies. You can just go through here and I'll point out, the floor cleaning, Dusty. We got the service business, the barista one. There's a pretty famous video of one going around here of Adam the barista. You can look that up on YouTube. Medical delivery. I'm sure you've seen it in like restaurants. He like drives around, drops it off. Logistics delivery and kitchen. Institutional ownership, as you can see in this graph, has slowly been creeping up here since December of 24. It's at an all-time high right now, which is, a strong signal of trust. And once institutional money usually gets implemented and invested, they typically hold for very long periods of time and don't really tend to sell. So it's so risky because they hardly have any revenue, a few $1 million, and their projected revenue isn't much higher. If you take a look at some of their multiples here, the enterprise value to revenue is almost 70 times. Normal range is 1 to 2, maybe even sub one. For a really high growth company, maybe five. And if you look at every other ratio based on profitability, it's negative because they're not profitable yet. Next on the list is QuantumScape. It's a company focused on developing advanced batteries for electric vehicles and other uses. Basically, their stick here is it's a solid state lithium metal battery. And the potential for this, which is a pre-revenue company, and they have not fully developed it yet. We'll talk about that in a second. Um, the new battery will potentially allow electric vehicles to go 500 plus miles instead of the normal, 2 to 300. This could end the range anxiety a lot of people worry about with running out of power on longer trips. It also enables super fast charging. They can charge from 10% to 80% in under 15 minutes. And that's without overheating or degrading the battery. And that compares to a normal 30 to 60 minutes for the current batteries. So if you're looking at this chart right now, I'm sure, they're not profitable yet. None of these companies are, hence the 10x potential. But the next 12 months, enterprise value to revenue, you can see how it was up to 368 here. Now it's at 3,180. Basically, that stems from September 2025. QuantumScape and Volkswagen went to an auto show and displayed their battery and its real case life use for a motorcycle. I believe it was a Ducati motorcycle, if I'm pronouncing that right. And that's what's warranted such an increased 10x in the multiple here. And it's still basically pre-revenue company. Last on the list here is White Fiber Inc. It was founded in 2024 as a part of Bit Digital's transition from cryptocurrency mining to high performance computing and data centers. Basically, they purchased the warehouses, the factories, or just large facilities in general. Afterwards, they renovate these into data centers and install tons of GPUs. This allows White Fiber to build their data centers twice as fast and 40% cheaper on average. During their last earnings call, the CEO, Sam Tabar, said that White Fiber is slowly getting a reputation in the market for establishing a track record of the unique way of building data centers this fast and this cheap. So basically, why is it risky? For the same reason as the other two, but in the sense that this company has a little more established revenue base here, and a more established profitability. Of the three, this is the least risky, but I mean, it's still very high risk. They have revenue multiple of 8 times and EBITDA multiple of about 20 times.